All right, this is week 19, outlook number 1. Let's go ahead and get started with the British pound futures. So, starting on the 4-hour time frame, we've had some really interesting development in the price action, in which, if we zoom out just a little bit here, we're inside of the range still, and the price action that we had analyzed before was existing inside of this really consolidated tight area, which is oscillating about the equilibrium of the range. And so I remember saying that I was looking for sells and looking for these targets, but price actually decided to forego all of that and give us a response to push deeper into the premium side of the range. And that was based off of these two liquidity draws, and that's what led to the run taking out everything on this side of the basically internal price leg here. And so I'm starting to notice this a lot more is once you start seeing an internal price leg or a price leg that forms and everything seems pretty much balanced, there's probably going to be a low effort, high volume, high momentum liquidity run to take out everything. I'm just starting to notice that a little bit more. I'm not sure what I want to call that or how I want to go about looking at that, but it's something that I've noticed. And with respect to the trading range here, what we have is the fact that when we were looking for sells, price did give, the response, but we just ended up being on the wrong side of the range. We're, I guess, as price dove deeper and we see that we had this liquidity draw, it should have been immediate that we most likely were not going to go lower. I just wasn't paying attention that well once that liquidity draw happened. And then immediately right after that, we had a secondary liquidity draw. And then that's what led to the run here. And we took out not only this high, but more importantly the high that led to the bearish price action to begin with. And so because we ran that and then we had a break of structure, we see that this is pretty much uninterrupted break of structure. So we could be looking for potential buys as we see prices drawing back towards the equilibrium, but more likely into the discount side of the range. And we have to be adherent to the price action that caused this. And so the idea here is that I would most likely be looking for this price gap as my area of interest to play. And I mean, technically, you could say this is a sponsor candle, but because it does not mitigate previous liquidity or a previous inefficiency object, I'm more inclined to play the price gap here. And so I would look for a response from this price gap or, just automatically set up a refinement play here and then look for targeting of this high. Now, why do I say this high? It's because that I don't know if I talked about it in the last outlook, but in the 4-hour, we were saying that if price were to break this high, the last high that we'd be looking for is this next high. Well, this run, after we had this liquidity draw, ran all the way to this high and then left like 4 or 5 ticks there. And so that basically generated relatively equal highs. And so if this is going to hold, what I would like to see, the ideal opportunity, is a response from this area of interest here. And obviously, because it's a price gap, we're looking for 50 to 100% of that, and then running towards that target. Now, the overall bias is still, or the macro bias is still bearish because we are part of, this was a bearish range. So what I would like to see is for price to run into this area of interest, run higher, and then begin the bearish price action conversion or transition of bullish price action to bearish price action. Now, that's a lot of anticipatory price action. So if we break it down to just the immediate, what I would like to see is for price to give a response from the area of interest here on the discount side. And this is, good because we will be taking buys on the discount side of the range. That's kind of what I want to see right now. Now, the counter is that this just continues to keep going down and we start taking out lows, and then we have to assess the price action and structural actions that occur at these liquidity points. But as of right now, assuming that the price action holds, seeing that we have uninterrupted price action, a break of structure of a previous liquidity point, but not just that, but multiple liquidity points, and this is the origin of the move. As I see it, I would like to see a response from here to continue higher. So yeah, so that's what we're seeing on GU. Now on gold, gold has decided to give us some more price action. Really not much to say here, to be completely honest. I haven't been tracking it too much. It's just, still oscillating inside of the range. If there's any opportunities, like there isn't really any I see for buying opportunities. Everything looks completely balanced to me. So this could be looking for, some sort of liquidity draw at any of these lows. We have a potential liquidity draw here at this low, it looks like, or we've generated, oh, maybe that's a liquidity draw, but yeah, I don't even really care, to be completely honest. Gold is just in a ranging market, so I'm not even really going to look at it. All right, on to the NASDAQ. The NASDAQ decided to break out of the price leg, which is continuation of the bullish run, which is the bullish price action that we were looking for. And you can see now that everything is pretty much balanced as we continue moving higher, which is really good to see, which is saying that this is efficient price action. This is efficient market. And so the last inefficient pricing that existed was basically this price gap here, or really it's a sponsored candle actually. So we mitigated this sponsored candle. And so what we could see is one of two things. One, we have the respect and we continue higher. So this black candle here will be, a pullback into whatever is on the lower time frames to mitigate that, and then we continue higher. Or we just decide to break the low here, and then that would establish potentially a new price leg existing from whatever to whatever. But as of right now, there's not really much to say. I mean, just look for a continuation of bullish price action. If we're looking at, the impulse, we have effectively after we had this low here, then we have this high here, this low here, this high here, this low here, this high here, this low here, this high here. And now we're effectively looking to create a new low. And so, but if this, and then because this new low is a part of the impulse and we see that we mitigated this sponsor candle, we would be expecting for price to continue moving towards this high. If it decides to break this low, then we will have transitioned into a new price leg, which exists from this low here to wherever that high is, assuming that this is the high and we break this low. But as of right now, assume continuation of current price action. On the Dow Jones, we are still inside of the bearish range here, which is pretty cool to see. Notice how last time in the premium, when I was talking about the premium, I said I didn't really see any opportunities. I didn't want to look for buying opportunities because we were inside of the premium of the range. And I'm so glad that I did not also look for sells, because remember, we're still looking for, there's nothing that really made sense. Like price is still looking to take out this high. And not only did we, inch towards it, but we've effectively created relatively equal highs. So I would not be surprised if price were to show, intent reversing off of this price gap here and moving higher. If not, then obviously you know that we're going to start moving back towards equilibrium of the range, targeting these liquidity points. Another thing is that liquidity points in this particular case, because we are in a range, they could be potential fuel. So we have to assess the structural actions that occur if we are to reach these liquidity points to move towards this high here. But as of right now, I still have high convictions that we're going to move towards taking out this high. It just seems plausible as far as the price action goes, because everything right here is pretty much balanced. Everything in the range is balanced. The only, solution, or the only price action that would make sense, is taking out or purging liquidity and activating orders at this high here. If we do run lower, it really wouldn't make too much sense to me, other than understanding that we're just reverting or regressing back towards the equilibrium of the range. All right, and then on to oil. Not much on oil, actually. We've, broken the high. We said that we were looking to start moving towards that high. We see that we tapped equilibrium of the, basically like the macro range, or like the monthly range. And then we had a pullback, mitigated whatever this is here, but that's actually invalidated. So we're just really entering the oscillation period around the equilibrium. We're really looking for price to take out the high. I have no doubt that it's going to take out the high this month whatsoever. And just based off the price action, it only makes sense. If this does, drop, it would be a little bit surprising. But based off of the price action, everything is pretty much efficient. You can see that there is no inefficient pricing as we traverse this impulse here. Everything is pretty much balanced. This does a little bit concern me that we invalidated this price gap because we closed below, or we didn't, well, yeah, we purged the body low of this price gap or of this area of interest. So I mean, there could be something that pulls back, but I'm not too worried, but I am concerned that that could be the case. But we're definitely going to take out this high. I mean, I have no doubts. Yeah, so that's pretty much that. Yeah, the liquidity draw, get rid of this. This is the main liquidity draw that led to this price action. We have that, and I'm not even sure what this line is, but I'll get rid of it. Yeah, so this is pretty much what we're seeing. The clean chart here is we want to know what happens at these equal highs once we mitigate these liquidity points. So yeah, so that's week 19, outlook number 1. Peace.